I'm Daniel Cunningham. I'm here at Estates Gazette's Liverpool Focus reception. It's tough times at the moment in the Liverpool market. Last year actually had record take-up, however it was based predominantly on two large public sector deals, and the talk in the market at the moment is where will the demand come from for the remainder of this year.
The underlying market this year is much better than it was last year, although the total figure will be probably half the total figure for 2009. The only large deals I can see happening this year are Waitman solicitors and a handful of public sector lettings which should come forward. But I think the overall message is it's a lot better than it was last year. We can now see the, dare I say it, the green shoots of a recovery, and we're all a bit more optimistic than we were. But it won't be as good in total as it was for 2009.
It's not stopped English Cities Fund, who have started a speculative development of number 4 St Paul's Square. It's one of the largest buildings being built speculatively in the northwest, and the only one in Liverpool. And I had a chat with Darren Lawless from English Cities Fund about how they're getting on. Why did ECF decide to go ahead speculatively with such a large building?
It was a relatively considered decision, because we've been involved in St Paul's Square now since 2002, and this is the final phase of development, and we were keen to keep the momentum going of what we've already achieved here in terms of floor area. We've been fortunate in developing 2 office buildings already to date, and it was clear to us that there would be a significant gap in the market in the years ahead if we weren't in a position to continue to develop. So that was always something that we wanted to continue to finish the square, and then we were obviously investigating the opportunity for securing public sector support in terms of gap funding, and we took a decision that the availability of grant funding might not exist indefinitely, and I think that's proven to be correct.
And how crucial was the gap funding to the scheme?
Without gap funding, we wouldn't have been in a position to start the site in this current financial climate. Therefore, it was absolutely critical.
I'm hoping that in the aftermath of the election, it will actually mean that things will start to actually improve a bit. There's already been some signs of improved inquiry levels. Mainly, I would say, at the lower level on the offices side, smaller requirements. And whilst the first quarter of this year maybe has been similar to 2009, there's only been really one deal of any real significance so far, but there are quite a number of inquiries in the pipeline, even of a large nature.
John, your speciality is retail. How do you see the market in Liverpool at the moment?
I think that in Liverpool, like it is in any other city and locations throughout the country, it's tough. We act for landlords and tenants. It's fair to say the occupier market is probably stronger, but there are opportunities for both parties. There's great opportunities for the occupier because they can get better deals, and they can probably get into locations where they haven't been able to before, especially if there's somebody like a new venture, perhaps hasn't got a proven track record, but landlords have got space they have to get rid of and make income producing. That said, on the other side, there are great opportunities for landlords to recreate their retail pitch, whether it's a centre or a high street, and to actually revitalise that location.
I'm here with Steve Parry, Managing Director of Neptune Developments. We're in Liverpool at the site of Man Island, which is a joint venture between Neptune and Countryside Properties. It's a residential and office scheme, one of a few buildings being built in Liverpool. Steve, could you talk me through where the scheme's up to and when it's due to complete?
Yes, well we've actually got the first handovers of the residential phase in about 3 months' time, with the office development, which is pre-let to Mersey Travel, being completed next summer. So we've got a fair way to go yet, but it's well on, and if you walk around the site now, you'll see that the buildings are starting to take form.
Well, you must be the envy of a lot of developers in Liverpool having such a massive pre-let to Mersey Travel. Also, the funding element. Could you explain how did the funding from Commerce Bank come about?
Well, we had quite a big debate last year about whether we should retain the investment. Unfortunately, and that would have been our first desire really, to keep hold of the investment. And unfortunately, the UK banks being quite slow to react last year, it was very difficult to get them through credit, even though we had the equity to put into the deal. So we took a view and just did a deal with the German pension fund. And they've been very good, and they were very enthusiastic about the scheme. And actually, it was a big boost of the vote of confidence to Liverpool for them to come in. Because I don't think there's actually a comparable deal has been done with an overseas pension fund in Liverpool for many years.
And since the scheme was planned, obviously the market has changed considerably. Do you still stand by the decision to go ahead and start speculatively?
Fundamentally, yes. We always knew it was going to be a gamble, because we can't dictate what's going to happen in the wider financial community, not only in this country but in the world. We're all affected by what happens. But it was very obvious to us that there was absolutely no other supply coming through, particularly of the quality that we're talking about.